Nicolas, Veron, very welcome to the Swedish House of Finance.
Thank you.
I have 5 questions for you on Brexit, i.e. the results of the referendum in the UK on leaving the EU. And first of all, what do we know about the real meaning of Brexit? What will it be like?
We don't know yet. And when Prime Minister Theresa May says Brexit means Brexit, it's a way for her not to answer your question. So first, it's likely that Brexit will happen. It's not sure, because you can imagine scenarios where the equation of keeping the UK united, keeping the UK prosperous, and exiting from the EU becomes really impossible to solve, and that would precipitate a second referendum. But at this point, it's not the baseline scenario, so the baseline is that the UK will exit the European Union. Second, if the UK exits the European Union, it is likely that it will also exit the single market. And the reason for that is not only the conditions on free movement of labor, which are one of the 4 freedoms that defines the single market, but also simply the fact that the discipline of the single market in terms of common regulations, common enforcement, common institutions might be too much for a UK Brexit government to accept. For example, a theme of the campaign was that the rulings of the European Court of Justice on a number of matters important to the UK were unacceptable. The authority of the European Court of Justice was unacceptable, and it's difficult to square that with staying in the single market. So I believe by far the most likely scenario is one in which the UK would exit both the European Union and the single market. So not a Norwegian agreement, but something more like Switzerland, or perhaps Switzerland minus, because it's unlikely that the UK will be able to negotiate everything that Switzerland has negotiated in the past while being in the Schengen area and all that.
There has been talk about hard and soft Brexit. Is that more rather hard Brexit?
Yeah, I think I mean, these are loose categories, but generally speaking, less than Switzerland, and that probably counts as pretty hard. But I find it difficult to picture an outcome of the negotiation in which the UK could, irrespective of the tactical choices of the different players, on fundamental reasons, I think a Brexit UK or Brexit England will not be ready to accept the discipline of the single market the way Norway or Iceland have accepted it.
When do you think we will know more about sort of what it will be like?
This is a very difficult question. So remember, before the referendum, David Cameron said Article 50 notification, so the start of the process, would be immediately after the referendum. Then the day after the referendum, he said October. And now Theresa May's team says probably April, and there are rumors coming from Downing Street saying late 2017. So it seems to be a moving target, and it seems to be delayed more and more. Now, maybe Article 50 notification will never be triggered. Maybe there will be a different framework for the negotiation, even so that sounds unlikely at this point. Or maybe the UK will not leave the European Union in the end, as I mentioned, in the event of a second referendum. So at this point, we don't know. We know that there will be a lot of uncertainty for a prolonged period of time, extending at least until the second quarter of next year, but
so possibly a year.
more.
It will take a year before we are much wiser.
There is no limit. So the current calculation is that there is a political interest for Theresa May to have the UK actually leaving the EU before the next general election in 2020, I think, but even this can be debatable. Again, what we've seen is that what people have said before on the timetable has not proved to be reliable.
Financial markets typically don't like uncertainties, and the initial reaction from financial markets after the referendum was very negative. Sort of falling stock indices and falling pound and so on. But that has reversed to a large extent since then. What is your take on sort of what will be the financial market impact of Brexit? Sort of how much will it affect world growth and UK growth and Europe growth?
Well, I think there are many questions here. First, this whole story has not created and probably will not create financial market instability. So you mentioned initial negative reactions, but they were pretty orderly.
Yeah.
The reason for that is that we're talking about something very structural, whose consequences will be deployed over the long term. So there's been a one-step adjustment in the value of the pound, and that has not recovered. But for the rest, and there are also distortions. For example, for FT100 companies whose revenue and profits are mostly made outside of the UK, the fact that the pound goes down 10% means that mechanically there's an increase in the share price measured in pounds. So if you filter all that out, at this point, basically it's still early days. There will probably be no market instability. There has been no market instability. But if Brexit is confirmed, and if, as I suspect, it is confirmed that it will be an exit also from the single market, the structural impact, long-term structural impact for the United Kingdom is extremely negative, especially for the City of London, but also for other sectors of the economy. And I suspect this will have consequences in a number of market segments for the UK. Now, you talked about world growth and European implications. At this point, there has been no political contagion. You don't see in member states an acceleration of something that has existed for many years and will continue to exist, but hasn't been reinforced by Brexit, which is political forces outside of the establishment mainstream calling for more distance from the EU. Yeah. So political contagion has not happened. Is probably not going to happen, at least not in the near future. And if that is confirmed, the consequences for the EU are not necessarily that negative. There will be some winners. Some places in the EU will want to eat the city's lunch, if you will, and some may win activity for this. And I think macroeconomically at the level of the entire European Union, aside from the United Kingdom, the effect is probably slightly negative, but not dramatic. And for the world as a whole, it is probably not going to be meaningful at all. So I think Brexit is primarily a UK issue. The impact for the UK will be negative, but over a long, protracted period, and therefore no instability.
Okay, and the uncertainty will be as for some time still on sort of exactly what the...
Well, it depends uncertainty for whom, right? So for companies which have made major investments in the City of London, for example, they will have to think about how they change their business footprint and adapt to the new reality if the City of London is no longer in the single market and therefore a less good place to do financial business, all things equal. But at this point, I don't think we'll see many dramatic decisions of moving jobs and moving activities as long as Brexit itself is not confirmed. Because if the UK stays in the European Union after all, then there is no reason to leave the city. So I think there will be some investment withheld, but nothing more dramatic than that in the first phase. I think where you might see more consequences is if Article 50 is triggered, if there is a perception that Brexit is for real, more than in the case now, then you might see more measurable economic impact in terms of corporate behavior.
Okay. And Article 50 is the start of negotiations on what Brexit will be like.
Correct. Article 50 of the Treaty on the European Union, and sorry for using jargon, is the currently agreed process for a member state to leave the European Union. And the baseline assumption is that this Article 50 will frame the process of negotiation for withdrawal of the UK from the European Union. This is very likely. It's not entirely certain, but it's very likely. And the first step is the UK government sending a letter to its partners in the EU, and that's what is meant by Article 50 notification.
For a long time, there has been talk about a two-speed Europe or even a multi-speed Europe, that different countries within the EU might have different needs and interests in sort of closeness of cooperation with the others. Might Brexit trigger sort of new developments in that dimension?
I would say, if anything, probably the opposite. And the reason is that the biggest divide inside the EU, not the only one, but I think the most meaningful, is the one between the Eurozone and the other countries outside of the Eurozone. And I think it's fair to say, no disrespect to Sweden, that the United Kingdom so far has acted as sort of an anchor for the countries outside of the Eurozone.
Sure.
If you look at banking assets, for example, on the current structure with the UK in, the Eurozone represents about 2/3 of total EU banking assets. With the UK out, it represents about 90%. I think a bit more. So the balance becomes very different. You have a different map of the European Union with a different balance of interests in the European discussions. And then the question becomes, okay, if the Eurozone becomes so dominant in a number of dimensions of the European Union, will there be a sort of inexorable momentum towards more sort of consistent policies on a number of areas? So
there will be less need for two speeds, if you like.
Lots of uncertainty on this, and I think it's impossible to predict European politics over a medium-term horizon. But if the Brexit has any impact, I would say it's probably less multi-speed and more multi-speed.
Okay. For a long time, the City of London has been the financial center in this time zone, certainly, and possibly in the world. Is that era over?
It might be. I think we tend to forget how recent London's dominance actually is. I mean, it existed in the 19th century, etc. But then the post-war period was one of largely closed banking systems in which the intermediation for Germany was done in Frankfurt and for France in Paris and for the UK in London, but London didn't have this global dimension. Then came the euro currency market in the late 60s and early 70s, and then the Big Bang in the 80s, and then single market integration, which basically enabled the City of London with a head start to benefit disproportionately from network effects. Now, network effects have been the best friend of the City of London in the last 2-3 decades. If London exits the single market, it might become the city's worst enemy. And the reason for this is that the EU market will remain, the EU economy will remain much bigger than the UK economy. That's a fact that isn't going to change. And therefore, access to the single market might prompt a number of financial firms to relocate activities from London to the European Union, maybe to Sweden, maybe to other countries, more than would be necessary just for narrow scope of business that is dependent on the so-called EU passport. So essentially, the network effect would incentivize financial firms on purely business grounds to relocate more, an overwhelming share of their activity to the EU, to the extent that they have EU clients. And that could be very disruptive for the city. So the city is so dominant now that it will be a long time before an equally large financial center can emerge in the rest of the EU. At this point, there is a huge gap. But the direction of travel is pretty harsh from a City of London perspective. And I frankly don't think it's realistic to believe that if the UK exits the single market, there will be no place in the single market that can beat the city, given this ingrained advantage of being in a larger jurisdiction.
So it will be a slow process, but in that direction at least.
It's difficult to know the pace. It's difficult to know which financial centers will win. Everybody's speaking about Frankfurt and Paris because these are the two largest member states in the rest of the EU. But actually, I could think of other places that may be better positioned, if only because labor market regulations and also to an extent tax regulations are so rigid in Germany and especially in France. So it might not be in the bigger member states.
Even Stockholm could profit from it.
I think that's far from unrealistic. I think you will have a huge competition. The city is a huge cluster of business and wealth, and many places in Europe will compete to attract some of that business and some of that wealth. So you will see a significant redrawing of the map. I believe it will be transformational.
How do you think Brexit will affect Sweden? Not only in terms of financial Stockholm strengthening its position as a financial center possibly, but more generally?
Well, that's a difficult question because, again, we don't know what the ripple effects will be for the political structure of the European Union. I mentioned this idea, which I believe might have some substance, that because the UK had been the anchor for the outs in terms of Eurozone in and out inside the EU, that might, over a medium-term perspective, not in the short term, but over a medium-term perspective, the exit of the UK might affect the terms of the Swedish debate on joining the banking union or even possibly at some point joining the Eurozone.
Yeah.
But again, I don't think that's happening in the very near future. I take more medium-term horizon on this perspective.
Well, those are challenging thoughts. I mean, maybe we can come back to later. I mean, the Swedish political debate has not really caught up to.
It's early days.
Yeah, it's very early days.
We're talking about very structural changes in the fabric of the EU if Brexit is confirmed, or even if Brexit is reversed, actually. So these things tend to develop relatively slowly. So we're only like 2 months after the vote. It's very, very early days.
But these will be important political issues for the domestic debate in Sweden in years to come, how to relate to the common currency and the banking union and all that
and
stuff.
I think it's reasonable also to see how the banking union develops, how the Eurozone develops. If, for example, the current banking situation in Italy can be addressed in a satisfactory way. I mean, there are many moving pieces.
Yeah, there are.
So I think patience will also be needed. But indeed, history is on the move in Europe, for better or worse. And I think it requires agility on the part of policymakers and observers to not think too much with the categories of the past, but adapt our analytical categories also to this new landscape.
Thank you very much.
Thank you, Pehr.